Hello, everyone. I am terribly sorry for starting this webinar about 9 minutes late. I know many of you have been waiting for quite some time, but I really apologize. We had some internet issues going on my side. One of those times when you are preparing for something big and things like this happen. But this is the beauty of working on remote, right? So let's get started with our webinar, and I'm going to allow a couple more minutes for everyone to join in. Please, if you can give me some feedback, you hear me well, you see me well, it just helps me, before I move forward to the next slides and stuff like that. So if you can put some comments in the chat box, whether you can hear me well or not, that will be helpful. Oh, okay. Thank you, Jenny. Your feedback is good, helpful. Okay, so let's give a couple more minutes. I know, there's a lot of things going on right now in the economy with the presidential elections and spiking cases of coronavirus. So, there's a lot of things going on with the social distancing and everything. So I don't want to go too much detail on that side, but let's get started with our webinar. Hey, Betty, thank you for your feedback. I really appreciate it. Thank you, Jim. A minute ago, clear, quick, and sound. Perfect. Okay, let's get started with our webinar. And so if you have any questions, some housekeeping items before I move on further, if you have any questions, feel free to post in the Q&A box, not in the chat box. If you need my attention answering your question right away, put it in Q&A. And when you are giving me a feedback, try to post it in the chat box. I, as well as my business partner and my sister, Taruna, she will be monitoring the chat box as well as the Q&A from time to time. So let's go over the presentation. Okay. So a little disclaimer before we move forward that this session is educational in nature and should not be construed as a tax advice and may not reflect changes in the federal or state law subsequent to the presentation date. Before taking any action based on this information, we strongly encourage you to consult with your professional accounting advisor about your specific tax situation. And the material in this presentation has been prepared by and is the property of the KB Tax Devices CPAs. So all content, including images and impressions, are protected under the US intellectual property and trademark laws. So any reproduction or dissemination of any element of this presentation without prior written consent from us is expressly prohibited. I know it was a little bit of a lengthier disclosure here, right? So a little bit of a firm overview. The KB Tax Devices CPAs is founded by two sisters, myself and my elder sister, Taruna. In 2017, we are a full service professional accounting firm based out of Central Valley, Pennsylvania, and we provide year-round advisory services, as well as we are tax savings expert who specializes in hospitality industry, real estate industry, small businesses, and professional service providers. And for many of you who knows us and who has attended our prior webinars, that we have been educating business owners through the webinar since March 16, 2020 to navigate through this pandemic. When the lockdown was announced on March 13, most business owners were stressed out and didn't even know what to do and what not. And being an accountant and having a first-hand exposure with so many business owners over the number of years, we knew that the number one person who will be impacted by the lockdowns are the business owners. And hence we decided that we want to be that resource and available to them when they really need us. So we just started with our webinar. We didn't knew that we will grow up to this far and we will be doing webinar for such a long time. But I think it has been greatly appreciated by the community. So we will continue to do as long as we can support it. And proud to say, for those of you who don't know it, we have been awarded as the best accounting firm in Lehigh Valley, Pennsylvania by Reader's Ranking Award of 2020. So really proud of my team, as well as TaxBuzz Best of 2020 Award and TaxBuzz Top 100 Professional Accountant Award as well for 2019. So how can you save tens or hundreds of thousands in taxes before the end of the year for 2020 with a Biden win or contested election or maybe an unknown outcome? Because as we all know, there is a lot of things going on, right? Some news channels are saying that Biden he won, he will be elected as the president. Some news channels are saying that it is being contested, and between the two of this, right now, we have unknown outcome. How long it is going to remain, no one knows it. Just want to give a full disclosure here that today's presentation, by no means it is supporting Democratic or Republican. We are just giving out our professional opinion as the tax law remains right now, and what changes are supposed to be coming in if Biden is elected or the election is contested, either or. We are not favoring any political party here. So let's just keep it all professional. And as of today, we don't know 100% who will be the president in 2021. While it looks like Biden is ahead and has been announced on major new networks, there could be 4 scenarios, and that is what we are planning for. So if you are a business owner and you have never planned anything when it comes to the taxes before, this is the year you absolutely must and you need to plan. And there is a reason behind it. Because of the pandemic, at the same time, CARES Act related assistance if you have taken, and because of the situation we all are in, we know there is an economic deficit going on. So there is tax law are going to change, and the tax laws tax rates are expected to go higher in next future years. So if you are someone who is kind of making more than $500,000 a year in gross revenue, you absolutely need to plan. If you're making less, of course, planning is helpful, but it is a must, not an option for anyone making more than $400,000 or $500,000 a year. So these are the 4 scenarios that we are speculating right now. Number 1, which is an unknown outcome, which is what we were all in, until the week before or last week around this time. And, right now, the elections are being contested. We don't know who will be the president. And if Biden wins, and what if Trump wins? The chances of that are very limited again, but, we have to plan for all 4 of the scenarios. And the problem is we may not know by 31st December 2020 what the outcome of the current election is going to be. So which represents a problem. What do we do, right? And what's coming in 2021? So election was done on November 3rd. That day, we did not know what was the outcome. And I think we might spend this 31st December without knowing the outcome again, right? Whether whoever is winning in these elections, but we do know that both the parties are considering some sort of new COVID bill, okay? And it might come sooner, it might take some time. There are a lot of things to come in. Now, of course, our tax deadline is approaching April 15, and the extension will be again, as usual, October 15th and 31st year end. So, but between now and the next year end for 2021, if Biden were to get elected, you have to plan for every single one of this time frame. Yeah, I repeat again, if Biden were to elected, you would have to plan for every single one of this time frame. Because with the Biden's tax plan, lots of tax hikes are included. And, both sides, as I was saying before, wants a new COVID bill. We already had, as a response to the coronavirus, Family First Coronavirus Response Act. We had CARES Act, which was a $2 trillion bill, and an interim bill with the emergency, a $484 billion. The fourth bill is already in the draft format. It could go based on Senate and House, where they elect. But based on that, it would go in one or the other direction. And the tax environment will be vastly different depending on who finally becomes the president. Individual income tax rates per Biden are supposed to go high. Per Biden's tax plan are proposed to be increasing to the top rate back to 39.6%, where it set prior to the Tax Cuts and Jobs Act. Now, with the Trump's tax plan, as Trump has mentioned, the idea of a new 10% middle income tax cut. Additionally, he supports extending the tax provisions under the TCJA beyond 2025. So, there are whole different things that are coming up front. Now, when it comes to Biden's tax proposal to the capital gains or dividends taxes, he's proposing to increase the top marginal income tax rate on the long-term capital gains to 39.6% for taxpayers earning more than $1 million annually. So if we are increasing capital gains tax from 20% to 39.6%, that is a huge, huge boost on the taxes side. Plus, he would also eliminate the step-up basis tax expenditure that allows descendants to pass capital gains to heirs without taxes. So the top tax rate on long-term gains would nearly double from 23.8% to 43.4%. That is, huge, huge, huge increase in the taxes. And because of that, I'm emphasizing again and again, if Biden were to elected, you definitely need to plan out, how to avoid this capital gains taxes, how to avoid this, higher taxes at the personal income tax level. Now, Trump is seriously considering a capital gains tax cut via executive action. Additionally, he has stated that he would propose cutting the maximum capital gains rate to 15% if re-elected. His fiscal year 2021 budget proposal would extend the applicable Tax Cuts and Jobs Act provisions beyond 2025. And Trump has also floated indexing capital gains to inflation. So when it comes to the payroll taxes, Biden has proposed eliminating the wage base cap for the Social Security taxes from $137,000 for 2020 on taxpayer with income above $400,000. And Trump has lobbied for payroll taxes to be cut or outright completely eliminated. So under an executive action, employers are allowed to defer the collection and payment of the employee share of the FICA tax during the September to December 2020 period to January of 2021, with a promise to eliminate the deferred taxes if re-elected. And I know many of the business owners did reach out to me, my clients, as well as the attendees of these webinars, asking if we should be taking an advantage of this executive action that was announced in September. As I mentioned earlier, because employees will be still required to pay the taxes when they file their 1040 back in April or January through April 2021 timeframe, they will have to pay for this out of their pocket. Especially those small wage earner employees, they cannot afford to do this. So unless they, they allow you to do this kind of election on the deferring the payroll taxes, this action is of no help. So when it comes to the C Corp tax rates, the corporation tax rates, Biden proposes increasing the corporate tax rates to 28%. Additionally, Biden proposes a minimum tax on corporations with the book profits of $100 million or more. And Trump has not currently proposed any changes when it comes to the corporate tax rates. So QBI, qualified business income deductions, this was a huge deal breaker with the Tax Cuts and Job Act, where we were able to get the 25% of the qualified real estate investments, or qualified publicly traded partnership income through. And the deduction is currently scheduled to expire after 2025 under the Tax Cuts and Job Act. But Biden has proposed phasing out the qualified business income deduction for incomes over $400,000. So if your income is above $400,000, you don't get any QBI deduction, which in many business owners' cases, it's a huge chunk of deduction after the standard or itemized deduction. And Trump supports extending the applicable Tax Cuts and Job Act provision beyond 2025. So many other areas of differences we have besides some areas that we already went over, which is the child tax credit, repatriation of profits, energy tax incentives, itemized deductions, GILTI, and the healthcare. So there are many more areas, and there will be many more areas as we move forward. And that's one of the biggest problems in this country. Most small business owners and individuals believe that their CPA, accountant, or tax preparer is saving them money on taxes, but in reality, they are not. They are just doing the tax preparation, which is kind of cost of compliance. And what I call the tax preparation is kind of just putting in the right numbers in the right boxes in the right forms, which which any TurboTax or H&R Block software can do it. Whereas tax planning, which is the process of looking at person's personal as well as the business life and matching it up with the IRS's regulations to find out what is the best way that the taxes can be reduced. That is what the tax planning, which of course comes with the investment with the ROI. And I'm not favoring, again, any presidential candidate here, but as there was news circulating about President Trump's tax return, and I did receive many messages on that. So I just want to voice it out. He's not doing anything wrong. If at all, he was doing tax planning to not pay the taxes, and that is something most business owners avoid, and up to a certain extent, they are hesitant to do tax planning. And of course, if you don't plan, you fail. I mean, you're just preparing yourself to pay higher taxes. And of course, I hear this from many people. Yes, we love the country, being the citizens of the country, and we want to support the country. Yes, even I want to support the country. But, the Tax Cuts and Job Act. So if you know the Tax Cuts and Job Act, that itself is 70,000 pages long, okay? Out of that 70,000 pages, only 30 pages tells you how to pay the taxes, and rest 69,970 pages tells you how to not pay the taxes. So IRS does want you to save money, and if they did not want you to save money, they would not spend 69,970 pages how to not pay the taxes. Where most of the accountants in the country, they read those 30-page manual and file the taxes, which anyone can do it. We, as a CPA, certified tax coach and certified tax planner, read and study those 69,970 pages and help our clients to save money on taxes. Now, there are two ways that you can circulate money in the economy. Either pay taxes to the IRS, and IRS will circulate that money in terms of different benefits, available to the citizens of the country. That's one way of circulating money. The other way is you do the tax planning, keep hard-earned of your majority of your hard-earned money in your own pocket and pay less taxes. But when that money is sitting in your own pocket, at the end of the day, you are going to go out and spend in the economy, right? You will buy different products or services or things like that, you know. So you can decide what method of circulating the money in the economy you want to go with by doing tax planning, raising your standard of life, and raising your investment portfolio, or suffer and then pay to the IRS. Either way, you are helping the economy, you are helping yourself as well. So what is tax planning in reality? Well, tax planning is not something that is done after the year end. After the year end, you can only do the tax preparation, which is the process of preparing tax return for submission to the IRS. You can't do anything else. After the year has ended, the only option you have got is recording the history, right? So you have to kind of look at your accountant. Is your accountant recording the history or writing the history? Because the tax planning is something, I think I'm missing a slide here. So let me just go over that. So the tax planning is actually that is done before the year end, and it is the process of looking at person's personal life as well as a business life and the regulatory requirements to find out what is that best structure that we can help clients save money on the taxes. And it is done proactively. So you are planning and creating your history rather than just recording your history. And why have some business owners been asking about 101.5% tax? And this is something you must have read in the news as well as a lot of news channels as well, that if if Biden is elected as a president, there will be a tax hike of about 101.5% tax rate. And I just wanted to break it down. Where is this coming from? And if Biden's tax law is whatever he has proposed, that is implemented. We have just done a study for a business owner based in San Francisco, where FICA tax is 15.3%, additional Medicare tax of 0.9%, C Corp tax, which is increasing it to 28% from 21% right now, income tax and capital gains of 39.6%, which is what he's planning to increase, net investment income tax surcharge of 3.8%, California state taxes of 12.4%, and San Francisco city tax of 1.5%. When you add all of these numbers up, that makes it to 101.5%, or whatever that was. Yeah, 101.5% tax rate. And that does not include sales tax, property taxes, and things like that. So at the end of the day, it doesn't really matter how much money you make. What matters is how much of that money you're making, you're keeping in your own pocket. Because, how much you keep, that is what is more important than how much you're making. Each of those taxes add up to 101.5%, but it's not really 101.5%, because you would only have these tax rates if you live in certain cities and states. The same rates don't always combine on the same income at the same time. And you deduct taxes at different levels, which affects the taxable amount later. But it could be a lot more in taxes than you are paying today. That we all know that the tax rates are going to go higher. And regardless of who is president, there are massive deficits in the economy right now. We all know that money were being printed, a pandemic relief or stimulus packages have been provided, and the tax changes are coming, right? So irrespective of the fact, you know, the taxes are going higher. And my professional team right now, they are focusing on pandemic relief as well as the stimulus packages and the tax changes. Because if you know, and if many of you have received a PPP loan, not sure if you got a chance to listen to my video before, which I did last week on the PPP loan, how to plan for the forgiveness. And again, if you don't plan for the forgiveness, you will end up paying more in taxes. So you should absolutely listen to that video and plan for forgiveness. If you have not watched it, let us know, and Taruna can put the link in the chat box for you guys. So definitely listen to it, consult with your accountant and plan for the forgiveness. And we are helping business owners one-on-one, what is the best course of action for you. And if Biden were to win in particular, the post-election, let me see. Okay. If Biden were to win in particular, the post-election timeframes with Biden win is going to be, we will have the 31st year end as usual, right? Nothing is changing. No tax law has passed. And I don't expect to be passing something this soon. And, the tax deadline, again, it's going to remain as it is. Tax extension will be as it is. But if he is elected and the new tax plan, a new tax bill does pass sometime in 2021 first quarter, or sometime around here, in the past, many presidents have made it retroactively effective in the same calendar year itself. So I wouldn't doubt if he is elected and he makes it applicable in 2021 itself, right away. Or if he just, decides to make certain things applicable in 2021 and certain thing goes to 2022. Again, we don't know. But we all know that if the taxes are supposed to be increasing, take the maximum advantage of the things that you have available right now. There could be 2021 planning, which could be pre-tax bill, as well as many business owners, depending on your income level, you might have to do two different sets of planning, which could be pre-tax bill as well as a post-tax bill, because a lot of things are about to be changing. And if you have never done any planning before, this is absolutely a year, especially for these high earners, to do the planning. And there will be a whole bunch of more planning requirement for 2022 as well. So these are, I would say, the critical years of any business who is kind of growing at a faster rate or who's kind of making really good money right now. The next year is going to be like an iceberg, from the top, you cannot say how deep it is going to be, right? What you think you can save in taxes, or what you think what the tax rate looks like, could be completely different than what you can actually save with the planning for a new COVID build and a potential change in presidents, right? And when we say focus on planning, what I really mean is sit down with your professional accountant and go over these areas, or some of these areas. Now, when we do the tax planning, I like to look into the deductions, legal entity structure, retirement planning, insurance and asset protection, legal loopholes, tax cuts and job act updates, as well as Family First Coronavirus Response Act and CARES Act updates, advanced strategies, industry-specific strategies, your niche-specific strategies, as well as exit and capital gains. If you are someone who is in the business where you buy a particular business and flip and make it profitable for next 2 to 3 years and then sell it again, capital gains is something really, really powerful and where you need to plan for it. And when it comes to the capital gains, of course, the first word that comes in mind, okay, 1031 exchange. Yeah, no need to do any planning. There is nothing to think about it. yeah, of course you need to reconsider, okay? Installment sale and 1031 exchange has been used by many business owners when it comes to the capital gains or sale of the business or sale of the real estate properties. The monetized installment sale, I would be very cautious and hesitant to use it, as the founders of the monetized installment sale themselves are involved in a court case right now, IRS court case. And the way things are going right now, it does look like that the IRS is going against them. So I would be very hesitant until we find a resolution one way or the other way. I would not be using or suggesting monetized installment sale or installment sales to anyone. Now, when it comes to 1031 exchange, it is good, but it's not really good. And here's why. With the 1031 exchange, what you're basically doing is you're deferring out the taxes, you're not completely eliminating it. And the way we all know it, that the tax rates are supposed to go higher, why would you defer the taxes to the year when the tax rate is going to be higher, right? So, pay attention when it comes to planning what you are doing. The ideal tax planning is something which is not only beneficial today, but at the same time, it is beneficial in the long run as well. Because if you are utilizing a strategy which will wipe out your taxes completely today, but then tomorrow you have to pay huge amount of taxes, that is not the right tax planning. So definitely look into that. Of course, you must be wondering, if not the monetized installment sale, not 1031 exchange, what are we doing? I'm going to cover a really good case study on that in next few slides. If I have arranged my slides in the right way, hold on to it. But we have discovered a really good tax strategy around avoiding the huge capital gains taxes. So how I got started, if any one of you are wondering why I'm doing this, which no other accountant is doing, right? So growing up, I watched my father struggle with succeeding in his business due to lack of financial advice and proper tax strategies to utilize. And as a result, he was suffering in both of his businesses. When a business owner suffers, it's not just himself, we the whole family suffers as a result of that. So I decided I want to help business owners get access to the same elite strategies that the ultra wealthy are using to reduce the risk, maximize the returns, scale revenue, and build lasting wealth and family legacy. So I went on a journey to figure it out exactly how I can be that resource and guide for my clients rather than just preparing the taxes. And I'm proud to say that my both the sisters have joined me in this family mission to help small businesses with tax and financial guidance that leads to incredible growth and wealth generation. And we all three sisters are CPAs, which rarely happens, in a family, right? So yeah, here is the slide that I was looking before for what is a tax planning, right? Well, I'm sorry, and I already covered it, so I'm just going to skip on that. So want to take this moment to highlight on this case study, and any case study that you will see in the following slides are my actual clients. They have given us the written permission to share their case studies, and that's why I'm sharing it. So just a full disclosure here. And I really appreciate that they are, courageous enough to be vulnerable and share their case study for the to help out the other business owners. So meet my client Samina Sharp. Her parents owned 3 hotels in California, and they have been the victim of huge fraud by their hotel manager. They had the same hotel manager for about 20 years, who in fact was paying his own house mortgage and whole bunch of things out of the hotel business. And due to aging, daughter took control of managing the business, including the accounting and tax area, and had a bad experience with multiple accountants and tax attorneys. She almost lost her faith in the accountant. When we spoke the first time, she was like, I don't trust the accountant anymore. And she was in fact operating under the wrong entity structure. Her the second accountant that she got filed completely wrong sets of tax returns, missed the filing for 1099 forms, and many expenses on the tax returns were missing. And she has always seen her parents paying at least about $100,000 to $500,000 in taxes. So what we did, we helped her design the right course of action to bring her situation back on track. We evaluated the entire business structure and took actions to correct erroneous filing. At the same time, we amended her tax return for 2019, which was filed by the previous accountant, and they ended up receiving a refund of $70,000, first time ever in history. And we created a customized tax plan to eliminate about $1 million of capital gains tax on the hotel they were planning to sell. So they're planning to sell a hotel based out of California for about $2.5 million. If they had not done any tax planning at all, they would have paid $1 million in capital gains taxes, capital gain as well as state taxes and the surcharge and everything combined. Now, with the tax strategy that we did for them, they have eliminated this capital gains tax of $1 million. On top of that, they have the huge deduction available for 2020 as well as the next 5 years. So, this is a strategy that I was saying about, of course, 1031 exchanges are great, but they're not the best because with 1031, you're deferring the taxes. I'm kind of hesitant deferring the taxes to future when the tax rates are expected to go higher. If we can eliminate the taxes completely, that's kind of a win-win, right? So this is the email response I got from her when we told her, that your parents are getting $70,000 in tax refund. She's like, that is because your team is the best. If anyone can solve these problems, I have 100% faith it is the two of you. And I cannot tell you what a serendipity, I'm not going to even try to pronounce that word, time you showed up in my life. And I'm so ever grateful for that. Well, I'm not going to go into too much detail, but long story short, here she is saying, I haven't seen a refund since I was like 20 years old. Fascinating stuff. Can you imagine? People don't even realize, they're paying high amount of taxes. Even if I just, do a mental math, if they paid $100,000 taxes for 20 years, multiplied by 20, that is a substantially huge amount. Substantially huge amount, right? So when it comes to the taxes, you have to look at the cumulative number. Now, I oftentimes joke around with my clients and the prospects, like when you are looking to shop around, buying the clothing, or looking to buy some kind of services, like say for example, accountant, right? You're looking for a best deal. You try to negotiate and stuff like that. IRS is giving you an opportunity to, with the proper planning, to wipe out your taxes completely or reduce it substantially. People don't do it. They just pass on to that. It's like you go to the department store, they have the coupon available, discount coupon to be used, and take the advantage of the savings. And you're like, you know what? I don't want the discount coupon. Give me at the full retail price. I'll buy it. It's something similar to it. I don't know. Maybe, most of you guys love to donate your hard-earned money to the IRS. I don't love to donate my money to the IRS. Just being honest. So what if you don't do anything? Just stay as it is, okay? No, don't do any tax planning. You have never done it before. Just stay as it is. What you are looking here is we did an analysis with Biden's presidency and the new tax laws coming in. If it is someone who was paying estimated tax payment of about $16,000 in 2019 for the Tax Cuts and Jobs Act, is expected to pay $18,000 the way the tax law stands today, okay? And with the Biden's presidency, they will be paying $22,000 in taxes. And it is expected to go higher and higher. okay, the year going forward. So if I consider between 2019 and 2021, there's a huge difference, almost $6,000 of difference, almost about $7,000. So what if you were to continue doing what you did in 2019, you are estimating to lose the fees that you paid to your accountant, at the same time the taxes that you overpaid. It's just that the accountant is splitting with the IRS. And if all I did was save you 3 to 5 times more in taxes in the current year than what you invest, save you what you invest in this year, but you keep that savings every year, help you protect your assets for you and your family, help you plan for the upcoming Biden tax hikes, as well as take advantage of any changes in the CARES and new COVID legislation that will be coming in, and set aside savings and start to invest for the retirement, wouldn't that be really great? And the number one reason why most accountants don't know this, it's nothing against them. When an accountant is overwhelmed preparing thousands of tax returns which are due within a short time frame, you don't have enough of time to analyze anything. It's just you have to get going with the flow, and if you don't get going with the flow, you will miss the deadline. Whereas in our case, we don't work with any working tax prep client. We are highly value focused. It's like, generalist doctor versus spinal surgeon, working reactively or versus working proactively. And that's the difference. And I'm not saying the other accountant are negligent or incompetent. So meet my another client, Mario. He loved his accountant and was very loyal to him. He had the same accountant since last 13 years, and in fact, it was a family member, and was scared of the IRS, but was worried about paying high taxes as well. It's just that not everyone is doing the tax planning. They're just preparing the return for compliance. So needless to say, Mario did not like that accountant anymore when he realized that the fee was paying a few $100s for the tax preparation, but it resulted in an overpayment in taxes by $42,000 on an average for 6 years. If I do the mental math, $42,000 times 6 years, that almost $257,000 in cash that should not have been lost. What can you do with $257,000 in cash? I want to see what you can put, if you can put your response in the chat box. I want to see what can you do with $257,000 in cash. I'm going to take a moment here to launch a polling question. If you all want to take a moment to respond to the polling question as well. I don't see anyone can benefit from saving this high for money in tax savings. Is that right? What can you do with the money that you are donating to the IRS, which you don't have to pay them, but is available to you to spend on yourself? Yeah, go on a vacation, right? I see some good responses here. Okay, so while you are taking a moment to vote on that side, so some of the tax strategies we utilized for Mario was entity optimization, hiring his kids in the business, Augusta loophole, captive insurance, retirement planning, which all together generated first year tax savings of $42,000 and $214,000 in tax savings. Oh, I see people's responses now. Okay. I think there is a delay in Zoom. So I think when you post a comment in the, right now, or posting a question, there is a little bit of a delay. Okay, so I'm going to end the poll results here and show the results with everyone. So I see that, do you project your tax liability to go higher under the anticipated tax law changes in 2021? And as you know, 89% of the people are saying it is supposed to go high versus 0% saying no. And only one person saying somewhat, maybe it would go higher. That's a really good feedback. Okay, so let me just move on. And if we were to work together, if with any one of you on the tax planning side, this is how it would look like. On day one, we do the strategy session. We look at your last 3 years filed tax return to find out if there is any opportunity to request any refund, any mistakes done, any missed error, missed deductions, errors, and stuff like that. And then we send you the request list within 48 hours and kickoff call, design the tax plan within 3 to 5 weeks, and deliver the actual written tax plan back by highest tax courts and court cases. So a couple of tips that I want to give out here. If you are someone who is making, more than, I would say $200,000 or $300,000 a year, or you are someone who has a business set up as a sole proprietor, as a Schedule C, and not filing a separate business tax return, you definitely must look into some options available on the tax planning side of, best entity structure to avoid the self-employment taxes. And there are a whole bunch of things that can be done, but make sure, you spend enough of time, talking to your professional accountant, what can be done and what not. And the beauty of things right now with the pandemic and the CARES Act bill that was passed, that retroactive net operating loss carryback is allowed. So what it really means that if you have a loss, maybe in 2018, 2019, or 2020, in any of these 3 tax years, and it is a net operating loss, you can carry it back to last 5 years. And if you paid any taxes in any of the last 5 years preceding to that, you can request a refund. So many times I talk to people, they're like, I don't need to do any tax planning because I'm expecting a loss in 2020. But in reality, the losses are considered as a tax asset. So even if you're expecting a loss in 2020, you definitely still need to do a tax planning. How can you maximize on that loss, right? Because this is your only chance and opportunity to request refund for the taxes paid in last 5 years. For future years, with the proper planning, you can avoid the taxes. And I would say reduce the taxes, not avoid. You can cut down on the taxes. But for the, for the past, this is the only opportunity to go back and request a refund. So if we were to work together, we offer 3 different packages for this crisis and the political changes. The tax plan for 2020, 2021, and beyond. The deduction review and strategy planning, where we help you with the maximizing on your deductions on your home office, traveling expenses, meal categories, hiring children and grandparents, maximizing your depreciation, healthcare strategies, fringe benefits, accountable plans, medical reimbursement plan, home administrative office, and many more. There are more than 140 tax strategies that we have done thorough research and are expert in implementing for our clients. Legal entity optimization across the LLC, S Corp, C Corp, and partnership. Legal entity review. When it comes to the legal entity review, I like to consider the multi-entity considerations, non-income considerations, your QBI deduction review, as well as the multi-owner considerations. We have developed our own tools, which compares if you were to elect an S Corp, these are the 5 or 3 tax strategies available to use in the current year as well as the next year. At the same time, if you were to elect a C Corp, these are the 2 strategies available to use in the current year as well as the next year. So I don't like to give you a direct answer or serve the answer in plate. In fact, my role as an accountant is to guide you what are the options available and help you in make the decision. So the final decision should be yours. And I call this as making an educated and informed decision. No more saying my accountant never told me what to do and have to do. So, that's where we come in place. The retirement options and plans to hit an extra $1 million by retirement. When it comes to the retirement planning, again, we do a whole bunch of tax planning on that side as well. Insurance review to protect your assets and reduce your taxes. Again, there are a whole bunch of things comes in there as well. There are 50 state credit protection exemptions. We also consider, what are the state as well as the city exemptions that is applicable in your situation. Tax Cuts and Jobs Act, Family First Coronavirus Response Act review for liability minimization, as well as we are kind of helping our clients with the tax planning for COVID related bills that are about to come in 2021. At the same time, Biden tax hikes that are about to come in 2021. So, as many of you know, and many of my current clients who are on this webinar, that we all are engaged with the 2020 tax planning services, and we have started already accepting enrollment for 2021, both of these packages. And of course, we will be working the same way we did it with the PPP and EIDL, the Family First Coronavirus Act and the CARES Act, that our first priority will be working with our current clients. And once we have met the requirements of our current clientele, we will start accepting new clients to work on these deals. And I really apologize. Many of you reached out to us in the months of September and October, and we were not accepting new clients at that point because we had to cap off. We have started accepting new clients again, I would say since 20th of October. So Trump Tax Cuts and Review, which is Tax Cuts and Job Act, slip of tongue. So Tax Cuts and Job Act, when it comes to Tax Cuts and Job Act, looking at Section 199A, QBID deductions, C corporation tax rate, opportunity zone credit, and a whole bunch of things, as well as Family First Coronavirus Response Act, CARES interim bill, a whole bunch of things. If you have an employee or yourself or any of the family member who was quarantined or got contracted with coronavirus, there are special tax benefits available to you. You have to take the advantage of that before the year ends. And if you don't take the advantage of it now, unfortunately, those will be lost. At the same time, as a part of the pandemic and part of this interim bills and the CARES Act, there was election made to allow for, carry back the net operating loss. So here is this one, get cash with the NOLs, net operating losses in 2018, 2019, and 2020. And if you are planning to make an election for NOL carryback for 2018 and 2019, you have to make an election as soon as possible before the year ends. In many cases, I wouldn't say in all cases, but in many cases. In fact, actually, I was working with two clients last week, on a tax planning engagement. And when I was reviewing last 3 years of tax return, turns out they did not maximize on the depreciation and a couple other expenses. And by filing an amended 2019 tax return, we can get them $260,000 of extra deductions, which itself would be about $55,000 to $60,000 in refund. So that is a huge amount. I mean, $55,000 to $60,000 in refund is absolutely a huge amount. And one of the things I tell, but no, doesn't matter which accountant you work with, you should always get a second opinion from another accountant every 3 years, okay? Every 3 years, or get a second opinion from your accountant as well, every 3 years. There are a number of reasons, when you are working in that tight deadline environment, you miss out on many deductions, mistakes, errors. Sometimes there is not much clarification when you're filing the tax returns on the tax laws, and after a while, turns out you have received some clarification and the doors which seem like are not open to you becomes open. So, always get a second opinion every 3 years. And, with the Family First Coronavirus Act, CARES Act bill that are passed, getting a second opinion is even must, because you are allowed to carry back the net operating losses. The IRS and court case references to support our positions. When you are selecting to work with any professional accountant on the tax planning, make sure that they can offer you a written tax plan, which is backed by the IRS tax codes and the court cases. In our case, we do deliver a written tax plan, which is backed by all the references to the IRS court cases, as well as the tax codes and section codes and everything. The best tax planning, always keep in mind, is something which not only saves you taxes today, but also saves you tomorrow. Because right now, the tax law rates are very, I shouldn't say very low, but are a little bit lower than what it is going to be in future. And you don't want to be paying higher taxes in future when the tax rates are higher. The CARES Act 1 as well as CARES Act 2 or equivalent for 2020 and 2021, relief lending review and consulting when and if available, consulting for tax incentives, cuts, deferrals, and hikes. That is something very, very important if you are, especially making more than $500,000 a year. As you all know, we have 3 bills that already passed. 4th, 5th, and 6th Act are in the process right now. When it is going to come, what is it going to come? We don't know. And as we all know, with the first act, there was so much of stress figuring it out, have to do this right, have to get the advantage of the funding in the right time frame. And if you don't get it, or if it is not done correctly, you don't receive any money. And I do know many business owners, who has not received any PPP loan, any EIDL loan, because they didn't know how to get it. Or their accountant, they just told them, it's of no benefit. You have to pay back this either way. So it's of no benefit, and they didn't take it. If your accountant is not keeping up to date with the current tax codes, you definitely need to look out for the eligible accountant who is up to date and can help you. Because these are the things, doesn't matter as much as you love your accountant, you cannot afford to miss it. You have spent a lifetime building this empire. And because your accountant cannot keep up with the new tax changes, you don't want to miss out on anything. Of course, if you love your accountant, keep preparing the tax returns with them, doesn't matter, but consult with someone else and, get the maximum advantage that is available to you. And what's coming in 2021, my team will be on your side, helping you out with the unknown or contested results, new COVID bill and everything, that's about to be coming in. Consulting for tax incentives, cuts, deferrals, and hikes, as well as 2020 and 2021 pre-law, post-law Biden tax hike planning, Biden legal entity review, given Biden proposed changes, plan to address with 40% income, increasing your 40% income tax rate, as well as 40% capital gains taxes, as well as review all Biden tax hikes with proactive strategy recommendations. And if Biden is elected, of course, we may foresee paying higher taxes in 2021, right? And again, just to recap, his tax plan includes that the individual income tax to increase up to 40%, capital gains to go over 40%, elimination of self-employment tax limit is the $137,000, corporate tax rates to 28%, partial elimination of QBI deduction, child tax credits, repatriation of profits, energy tax incentives, itemized deductions, GILTI, and healthcare, as well as this analysis that we did of the actual combined total tax rate supposed to be. And these are just a few of the structures that I and my team have learned. We have the whole team here, where we have a panel of members who sit down and determine the course of action to take when it comes to the tax planning. So you're not getting a benefit of only one person's expertise, but the whole panel. And in the last 12 months, my clients have saved $1.4 million in the current year. That is a substantially high number, right? And $12 million by the time they retire. We had first option. Go as cheap as possible and try to sell as many as possible, but it would not incentivize us to really stack the value and actually save the money. I don't want to be another number cruncher accountant. And the second option, which does require a little higher investment in ourselves, but in exchange, we can actually reduce your taxes rather than just prepare the return. So I'm just going to skip all of these slides. I know I covered those. And when it comes to the tax planning, we covered dozens of strategies, which includes maximizing deductions, legal entity structure, retirement planning, insurance and asset protection, legal loopholes, Tax Cuts and Jobs Act, Family First Coronavirus Act, Coronavirus Aid Relief and Economic Security Act, which is CARES Act, HEROES Act, if it is passed, it is pending the legislation right now. Niche-specific strategies, advanced strategies, as well as international strategies, asset and gift freeze, tax advantage wealth management, exit and capital gains, over 85 tax strategies in total. So there are a whole bunch of tax strategies. And how. So let's go over some of the questions that people have and see, if we have any questions here. Karuna, do you want to go over any questions? I know we are kind of running over time. So I would just cover maybe a couple of questions, and whatever questions I don't get a chance to cover, I will personally respond back and email it back to you if that is okay. And while Karuna, you are working on questions, I'm just going to go over here and launch another poll.
Okay. I don't see any question here.
So let me launch this question. Do you firmly believe that, you know what, isn't this the same question or different? Okay, do you firmly believe that you have taken steps to lower your taxes in 2020? So who here believes that you are not saving money on taxes in 2020? While you're responding to that question, I'm going to go over the next steps. If you are someone who is looking to plan out and you need help, or your current accountant cannot, does not do any kind of a tax planning and love your accountant and just want to get a second opinion, we are offering these services to our, everyone as a complimentary, all the attendees of this webinar. Schedule up a strategy session for tax planning and forgiveness planning or cash flow forecasting and budgeting. And we will provide the free strategy assessment. You can reach out to us at admin@kbtaxdevices.com, or you can use this particular link, which I'm going to post in the chat box for if anyone needs it, to schedule up a session. In order to work with me, you don't have to change your current accountant if you don't want to. You can keep your current accountant as it is. Of course, I would love to have you on my team, but if you love your accountant and want to be loyal to them, just stay with them. And if they don't have the expertise of doing the tax planning services, we can help you out. So I'm going to end the polling result here, and we're going to share your results. So to my surprise, that no one in this webinar believes that they have taken all the steps to lower their taxes in 2020. Wake up, people, wake up. You only have, what, barely 45 days to plan for this year? Once, it's 31st December midnight and that ball drops in New York, everything is gone, everything is lost. So give this your top priority. And 50% of the people are telling me here that they don't even know what are the steps they can take right now to lower their taxes. 25% are maybe and 25% no. So absolutely wake up and make sure you reach out to the right professional accountant and get some help on it. So before I let everyone go, and if you can take a couple moments to give me a feedback on the webinar and answer this last poll, I promise it's a last poll. I would really appreciate it. My team does a lot of hard work in preparing the presentation and bringing in this value, at the same time responding to all the questions. So if you can give us some feedback, that is very helpful. At the same time, if I did not cover any questions that you had sent over in the emails, I apologize. I know many of the questions have been sent out. I will either respond to you personally, or if it is too many questions, I will shoot out a YouTube video and send it over to everyone. Thank you everyone for your time today. And thank you for staying with us past 15 minutes. I know we went a little bit over time, but really appreciate, and stay safe and take the advantage of planning for the rest of the year, whatever time you have available. It's better to be safe rather than to be sorry. Alrighty, so I'm going to stop the launching polling question here and share the results with everyone. So I see more and more people are looking for tax savings and planning benefits. I think, Taruna, we got our homework. We need to come up with another of our tax planning webinar. You ready for that, Taruna?
Yeah, that's the next one. We'll announce the date very soon.
We will announce the date very soon. Stay tuned to it and stay safe. Reach out to us if you have any questions. And thank you very much, everyone, for your time today. Bye.